Today I'm speaking to Pedro Palandrani, Director of Research at GlobalX. Welcome to the show, Pedro. How are things?
Doing good. Thanks for having me again here. How are you?
Yeah, very well, thanks. Nice view in the background. Where am I speaking to you from?
Thanks, appreciate it. This is New York City where we have our headquarters.
Lovely. Okay, well, for the listeners, I'm in our usual spot, CMC Markets offices by Liverpool Street in London. Usually we start these interviews by speaking to our guests about their background and kind of getting a better understanding of their context, but we won't do that today. I did ask you those questions in our first interview, so for anyone wanting to learn more about Pedro's background and GlobalX's fundamental investment philosophy, they can hit the link in our episode description to see that first interview. But today I want to start by asking a question regarding a focus of today's discussion, and that is, to what extent does AI present a generational opportunity for chip makers?
It's a great way to start, Haim. I think not only for chip makers, to be honest with you, but for any company, period, I think AI is going to be completely transformational. In fact, I would say that by the end of the decade, there are going to be two types of companies. One, companies that are using AI, embedding AI into their services operations, and two, companies that don't exist anymore. So I think that generally speaking, for any successful rollout of AI technology today, you essentially need two key ingredients. Number one, data, high quality data, and number two, compute power, hardware. And this is where the chips maker are truly positioned to benefit from this AI revolution. That doesn't mean that companies without these two ingredients cannot benefit. They're just going to have to buy or rent, have AI as a service solutions to actually get access to those two key ingredients. But that's generally speaking my answer to that. I think it's going to be transformational for any single company in the world.
We'll continue with the chip maker and hardware discussion then. And if we're potentially at the beginning, I read in one of your research pieces on the website, actually, we're at the beginning of a long capital investment cycle into the chip maker hardware space that's set to drive unprecedented growth. I guess with that in mind, what's the ultimate time horizon for an opportunity like this? How can investors size an opportunity or a market of this nature?
I think, short term, you're clearly seeing companies like NVIDIA truly benefiting, but I do think that this is a long-term structural trend that it's going to, take 10, 15 years to fully play out. Before potentially answering the size of the market and where we're today and where we're going to be, say, by the end of the decade, just want to perhaps quickly mention how we at GlobalX see the AI theme playing out. I think it's going to be foundational for our conversation today. But essentially, we think about three different phases. One, compute or hardware, the one that you're just asking about. Second is going to be around infrastructure and data management. And the third phase or stage is going to be interface. So, compute is that base hardware layer for machine interaction. So essentially here, the cheaper we can perform the desired action or any action in terms of computing, the more scalable that availability of that action is going to be. So compute here is essentially going to be almost about cost efficiency, and that's usually been the history behind the semiconductor industry. So you can look back at a transformational period of paradigm shifts, technological paradigm shifts. So in compute, you had Intel that won the so-called chip wars in the 80s and 90s because they had their x86 chips for personal computers. Then during the internet paradigm shift, Cisco won essentially compute with their networking capabilities. TSMC during the smartphone revolution, right? They were the independent chip maker for Apple, Google, and a few other smartphone manufacturers. So that's what's happening today with NVIDIA, where it's becoming clearly that first company that gets recognized by the market, gets recognized by investors, and it's just scratching the surface of the opportunity. And of course, I know we're going to talk more about the other two stages later today, but the second stage, infrastructure, you have hyperscalers, clearly companies like AWS, Azure really winning this second stage. And the third stage is going to be interface. Like I said before, this interface layer is essentially how consumers and businesses really experience this paradigm shift. So going back to my historical context, you had Microsoft that won during that personal computer era with their productivity suite. That was a company that was very well positioned. Google and Amazon won as the interfaces of that internet revolution, and then Apple really positioned themselves as the winners of the smartphone era. So all of those companies, if you think about it, these are the largest companies in the world today. So I think that interface layer is still to be perhaps identified by investors and by the market. And I believe that we still need to understand who are going to be the winners here. But I think that unlike prior paradigm shifts, these interface companies are going to be the ones that have already the technology-oriented relationships, and they're going to be able to drive top-line revenue growth rate from these relationships, right? So if you agree with these hypotheses, essentially I'm suggesting two outcomes. Number one, we're going to have a less number of IPOs or startups that actually position themselves as these market winners. And two, is actually going to be the incumbent companies, potentially software as a service companies like ServiceNow, Adobe, Salesforce, and a few others that position themselves as these interface winners in this AI era. So that's a lot of historical context, but going back to the chip makers, this is today for AI accelerators. This is a $20 to $30 billion market that's expected to grow to $100 billion just within the next couple of years. If you listen to NVIDIA's CEO, he essentially said during the latest earnings call that this is a $1 trillion market in the data centers that currently is fully focused on CPU technology, and that has to be transitioned towards GPU technology. So you're clearly talking about trillions of dollars that are potentially going to be invested in these type of chips.
Yeah, absolutely. And I guess a big part of that opportunity is not just creating new technology, but it's replacing legacy computing stacks to support the broader adoption of AI across the board. Do you have any kind of insight as to how big that opportunity is within the wider space?
Yeah, absolutely. Well, just to give you an idea of the current market environment, there's a private company called CoreWeave that essentially offers GPUs as a service. So instead of essentially buying the GPUs clusters directly from the likes of NVIDIA, their companies can essentially rent them out through the company CoreWeave, right? So the company did $30 million last year in revenue, but this year they're expecting to make about $500 million. So imagine just the growth that company is seeing. And just for next year, they already have around $2 billion contracted in terms of the technology that they're offering. So I think we're truly seeing exponential demand for GPU technology, and that's something that it's just scratching the surface, like I mentioned before. Even Tesla mentioned in their latest earnings call that they want to have access to GPU technology. Companies like Snap, it's not only Amazon, Microsoft, Google, Meta platforms really trying to get their hands in GPUs. It's pretty much large IT companies or companies that are trying to build tech-related capabilities. So this is really where we see the long-term opportunity. And even imagine a world of metaverses. Not too long ago, we were talking about metaverses, and clearly Meta and Apple still believe in that future where we're probably going to have the use of virtual worlds. GPUs are going to be incredibly important for that as well. So I think for companies in the AI accelerator GPU market, we're just scratching the surface when it comes to the opportunity.
Yeah, absolutely. And you mentioned consolidation, I believe, in reference to like the interface sort of segment. But I was reading about possible consolidation within the AI infrastructure market, as well as providers look at investments in or potentially even acquisitions of peers to secure themselves against shortages, which we've already seen to a certain extent in the current market. So talk to me about possible consolidation of this particular area of the AI value chain.
Yeah, it's really going to be to the extent to which regulators allow this to happen, right? If you think about it, NVIDIA tried to acquire ARM not too long ago. That didn't go through, just given the regulatory concerns around that acquisition. So I do think companies are going to try to continue to increase their M&A activity, but I don't know to what degree regulators are actually going to allow these companies to merge. It's becoming clear that access to semiconductors is critical, and that's even at the country level. We're seeing federal government starting to get to learn more about the importance of semiconductors. So I do think that even though M&A activity is potentially something that companies want to see, I don't know if the governments and regulators will actually allow that to happen.
Yeah, got it. A final point, I think, to close then on the chip maker and hardware segment of the interview is to ask whether there's any sort of burgeoning areas or opportunities that are fueling growth within this field. Again, I think I read one of your research pieces that was talking about device-based AI processors could soon become as common as the data center edge network AI chips that we've kind of already discussed. So is that an area of particular optimism and growth, or is there another one that you would point to?
That's an interesting area. Clearly, as devices become more powerful at performing these computing locally or on our own devices, right? Instead of having to send those, that data crunching decisions to a server somewhere, I think, these edge network AI chips are probably going to become increasingly important. Another vertical of interest and potential opportunities is kind of the networking market within the semiconductor industry, right? So if you think about back in 2019, if I recall correctly, NVIDIA bought Mellanox for about $7 billion. So Mellanox essentially offers the kind of that networking technology that allows GPUs to communicate with each other, right? So low latency, a very efficient flow of data, and that's critical for a GPU technology and data centers, right? So I think that's another area of opportunity. Again, NVIDIA's CEO talked a lot about that opportunity in the latest earnings call, and that's probably something that we're going to have to monitor at the end of the month when they report earnings.
Yeah, absolutely. Okay, well, to move on through this sort of whistle-stop tour of the AI value chain. Now, I haven't segmented it in the way that you described at the start, but perhaps if we can kind of layer on your segmenting of this entire universe, I think that would be a really interesting way to approach some of these opportunities. The next segment I thought might be interesting to discuss is the generative AI and LLM application, I guess. And this space has made the headlines for obvious reasons. You've got ChatGPT, Bard, etc. Do you have any data, again, that helps, like we did for the hardware space, people to sum up the ultimate potential or size of the market here?
Yeah, well, I think clearly it's going to be in the trillions of dollars, but anyone that gives you a number on this, I don't think it's going to be even close to what the true impact of generative AI is going to have on humanity, right? So, let's not forget, Gen AI is essentially a general purpose technology. So, in other words, it can essentially be used in most sectors, industries, economies that we have. So I think we need to start thinking about the massive growth in productivity that we may see over the next 10 years or so, right? So, for example, if you look at cognitive workers that are essentially engaged in production, those are going to become increasingly efficient, right? So, for instance, if Gen AI makes cognitive workers, these knowledge workers, on average 30% more productive over a decade or two, and these cognitive workers usually account for about 60% of the world's labor capacity. So that's going to account for about 18% increase in aggregate productivity and output spread over, again, a decade or 2 decades. So again, we're talking about trillions of dollars of added productivity and growth over the next few years. And I think that's really going to be quite transformational for humanity.
Yeah, absolutely. And like with the hardware space, I think the competitive landscape is particularly interesting here. You've got, search engine disruption, for example. While Microsoft were the first to announce ChatGPT's integration into Bing, to what extent do you think those sorts of integrations pose a serious threat to Google's dominance in this space?
That was a question probably that everyone was asking. When OpenAI announced Microsoft's dollar commitment or investment in the company, right? But I think there's probably going to be a certain inertia to continue to use Google as that search engine or default search engine a vehicle for most people. Personally, I still use Google, even though I tried Bing when they said that they were going to release some chat GPT features into the platform. So I think Google will remain the dominant player in the search space. For Microsoft, I think the real opportunity is going to be with their M365 Copilot, which will essentially allow users of Word, PowerPoint, Excel to use these generative AI features to create presentations, to essentially make sense of data, create powerful charts, etc. So I think that's where we see Microsoft potentially benefiting and driving top line revenue growth rates. I think that Copilot feature is going to cost about $30 per user. So if you compare that to the current $10 to $20 that Microsoft charges for that productivity suite per user, I think that's where the company is going to see most of the opportunities ahead.
Yeah, absolutely. And I guess to build on that, I want to form a picture of how we see the competitive landscape evolving over time. And people talk about kind of regional winners, particularly in this space, like potentially Google becoming the dominant player in the West, and then maybe you have one of China's big tech players becoming the dominant player in Asia. Perhaps you can talk to us about kind of how you see that evolving, or whether you see or anticipate one global leader. Give us a sense of that.
I think it's going to be a fragmented space, even though you're going to have vertical leaders in many different areas. For China is a country that, for good and bad, has no data privacy or control issues. So that's potentially going to allow companies in China to scale fast. However, since the government is going to have some sort of control over these data features and technologies, I think that could potentially be a hurdle over the long term. So I think if you look at more of the free market innovation that's mostly happening here in the United States and some other Western economies, I think that's probably where you could see most of the value creation opportunities over the long term. That's not to say that there are not going to be opportunities in China or other economies. But again, I think that where we're seeing most of the innovation happening, it's right now in the Western world.
Yeah, absolutely. And I guess this is where regulation comes back in. Different regulatory frameworks are going to obviously impose segmentation, I suppose. Yeah. And to finish this section then, before we move on to the third and final part of the value chain that I've identified as one to put under the microscope, generative AI has, at least it seems to me, and I suppose everyone else, an almost infinite number of use cases. And that's across an infinite number of industries as well. But perhaps you can highlight a few that excite you most, or that you're exploring in more detail at Global X.
Absolutely. And you're right. I think there's so many applications, use cases. I don't think we, like similar to the iPhone revolution when that was launched back in 2007, it was very hard to predict what are going to be the killer apps on the iPhone, right? It was very hard to predict that we were going to have social media platforms like Uber or Lyft, and I think that's really what's happening today with generative AI. We know it's powerful, but we still need to recognize what are going to be those killer apps in the future. But essentially, as a guiding framework, I think we need to ask ourselves, where does text exist today, right? So you can think about legal, you can think about search, document writing, insurance, healthcare. Anything with text could essentially be disrupted, right? And of course, again, I talked about search engine. That's probably something where we're going to see a lot of Gen AI features, summarization, customer service. We're seeing a lot of software and code developers really benefiting from these type of technologies. But I think we need to start asking ourselves, what happens when we start moving past or beyond text, right? And we're already seeing that with images, with videos. I think this is where we could see a lot of powerful applications. Essentially, what I'm saying is potentially a dynamic personalization of content that essentially is going to allow users to create movies or create their own video games, right? So if you want to watch a movie with XYZ plot with your favorite characters, you're going to be able to do that potentially. Same in video games, you're going to be able to really personalize your experiences through these kind of generative AI features. So I think that's where we could potentially see a lot of disruption in the next 10 to 15 years. Clearly, we're far from seeing that happening, but I think, again, 10, 15 years from today, that's definitely where we're going to see a lot of opportunities. Very specific use cases that we're seeing today, say that you want to build a more aerodynamic dynamic car or vehicle, and you're throwing a lot of data to the model and ask for more efficiency in terms of these aerodynamics. I think that's where you could see a lot of applications today happening, designing, creating different technologies and platforms. So that's just a little bit of context of what I've seen in the market.
Yeah, absolutely. And gaming, surprisingly, I suppose, and maybe I'm just not kind of open enough to this, but isn't one that I've heard too much about. I know things are going on in that particular market at the moment, but the potential application and opportunity in that space feels pretty huge. I don't know whether there's anything specific you can talk to about what you're seeing in the market right now.
So if you think about it, like companies like Roblox, for example, they've been allowing users, developers create their own worlds, right? So that's the beauty of Roblox. They have this ecosystem of, people creating worlds and trying to monetize those experiences, and at the same time, users leveraging those different worlds. So imagine that these developers actually have this type of features that allows them to bring to market a lot faster and quicker many of these virtual worlds, right? So they're going to potentially be able to monetize those experiences to a greater degree. And right now, that's only happening if you actually know how to do it and know how to write codes and create video games. In the future, anyone is going to be able to do that on their own. So I think that's going to be very, very powerful. And let's not forget, the video game industry is a $200 billion market every year. So I think that's definitely going to offer significant monetization opportunities within the AI ecosystem.
Yeah, one to watch for sure. Okay, I'll take us on then to the final segment that I've highlighted, which is automation, robotics, and autonomous vehicles. So I wanted to take a slightly different approach here. I read a recent Global X research piece that highlighted Japan's importance in this space. So perhaps you can describe why Japan an indispensable part of the automation story.
Yeah, well, I don't know if this comes as a surprise to investors and your audience, but Japan accounts for slightly over 50% of the total global supply of industrial robotics. So, as a side note, at the same time, these companies have fortress balance sheets. They have very high cash levels, low debt levels, very traditional Japanese companies that tend to be more conservative than Western companies. But that comment aside, I think you're seeing companies like Fanuc, SMC, Yaskawa, many others that are truly enabling automation around the world. And we know that the world is building more factories and requiring more automation, right? Especially if we think about the current geopolitical landscape and a lot of the geopolitical tensions that we're seeing around the world. We're seeing many companies bringing back that manufacturing capacity to their countries, whether that's the United States or Europe, or trying to, friendshoring, trying to bring those manufacturing capacities to countries where these countries have good relationships with. So I think that's where we're going to see a lot of capital going to. If you look at CapEx for the next 5 years or so, it's likely that CapEx on robotics and automation is going to account for about 25% of total capital spending between the next 5 years or so. So I think that's where these Japanese companies are going to truly benefit within the next few years.
Yeah, and just to sort of flesh out why Japan specifically are kind of uniquely placed to kind of build on the opportunity there. Is that because of legacy kind of infrastructure built up over time and they've got a bit of a moat, or like why Japan rather than another region?
Well, you're talking about companies that have been around for 80, 90, 100 years in some cases, right? These are the companies that have really kickstarted the automation revolution back in the day. If you think about it, the two largest markets for robotics and automation until now have been car manufacturers, the auto industry, and also consumer electronics. So those have been the two largest markets. By default, you're definitely seeing a lot of car companies coming out of Japan. So they've been using those robotic solutions for many, many years. The consumer electronic markets as well, heavily positioned in Asia for the last several years. So I think Japan was strategically positioned to really accommodate the demand from those two markets. Let's not forget, Japan has great relationships with both, the Western world, countries like the United States, but also even with countries like China, right? So I think Japan is definitely very well positioned with that neutral, let's call it neutral, a geopolitical position around the world.
Yeah, and a good example of that, I was reading again in that same research piece, SMC have managed to capture, I think it was 64% of the pneumatics market in Japan, which that's a big market share, but maybe not utterly sort of surprising, I guess. But then that translates as nearly 30% of the global market, which, I guess is a manifestation and a really good example of how big Japan's foothold is in the overall space.
Exactly. And SMC is a good example of a company that, does provide a lot of services to these two industries, car companies and consumer electronics. And one other interesting study or research that we're trying to do is understanding the impact in automation as car companies transition from internal combustion engine cars to electric vehicles, right? And we've realized that robotics and automation capabilities can be much greater in electric vehicles relative to internal combustion engine cars. And the reason why is essentially because an electric vehicle has way less parts or moving parts than an internal combustion engine, right? So if you actually look at Tesla, for example, as a proxy, you can truly see that Tesla's robotic capabilities in their factories is much greater than any other car company. And I think that's a result of the electric vehicle a format that, again, like I said before, way less moving parts than an internal combustion engine car. So I think as every single car company in the world transitions towards electric vehicles, we would see a pickup in automation and factory build outs around the world, and potentially these Japanese companies that we're talking about today benefiting as a result of that.
Yeah, and before we move on, just to highlight another example of one of those interesting Japanese companies, Omron aren't a company that I'd heard too much about, but I saw their main product described as providing businesses with a nervous system. So perhaps you can briefly explain who they are and how that product works.
Yeah, much of what Omron is doing is, like you say, is making the brain, right, or the nervous system for these robotics and factory automation capabilities. So, if you think about it, most of those capabilities are actually surrounded by sensors. So, sensors are critical to factories to essentially make sense of everything that's happening and moving around the factory, right? So I think there are special technologies essentially allowing machines to talk to each other, share information, and work together, right? So essentially like a team. So I think that's really kind of what they refer as their nervous system, their brain behind their automation capabilities.
Yeah, really interesting. And before we move on, like we did finish both of the preceding sections, we talked about sub-themes in each space. Is there one particular niche within this space, the automation space, that particularly excites you or that you're looking into at GlobalX?
Yeah, as I mentioned before, up until today or recent years, most of the robotic and automation capabilities have been used in the car industry and consumer electronics. However, the services industry is starting to finally adopt robotics and automation capabilities. And this is clearly as a result of the declining cost of these solutions, better applications. You're seeing a lot of improvements in that area. So that said, robotic surgery is one vertical, one niche vertical within robotic and automation that really caught our eye. And this is something that we've been following for many, many years. Companies like Intuitive Surgical with their Da Vinci robotic system, they're very well positioned to capture that market. So today, just to give you some numbers, about 5 to 10% of all surgeries in the United States are done with robotic capabilities. That number is expected to grow to 25% by 2025. So I think that's where we could see a lot of opportunities for companies in the robotic surgery space.
Yeah, absolutely. And I'd previously, in my interview notes, designed, I suppose, the interview to move straight on to now the products that Global X offer to gain exposure to some of these opportunities, which we will do in a minute. But I think a key thing to highlight, I suppose, is the convergence of all these themes and kind of where that is actually the real opportunity. So it's not one of these sub themes in isolation, but actually how all of these themes come together to drive growth in various industries. So maybe talk to us about why the convergence of some of these themes, and perhaps you can give a few examples, is so important to growth.
Yeah, like you say, the convergence of themes is a very powerful theme or tailwind for a lot of these technologies that we've been discussing today, right? It essentially acts as a network effect, so really powering each other as they become bigger. So clearly, we talked about artificial intelligence essentially being the brain in many technologies, and then you have the hardware robotics companies that are really benefiting from those applications. And on top of that, you can add Internet of Things, how these devices communicate with each other by leveraging sensors and other type of technologies. And from there, you can continue to draw parallels into other themes like autonomous vehicle, leveraging artificial intelligence. If you look at ag tech, really benefiting from application of robotic applications for agricultural purposes. We talked about healthcare innovation. So I do think that as AI becomes better and we have cheaper devices from semiconductors to robotic solutions, I do think that we're definitely entering into an exponential growth path for humanity, where a lot of these technologies are going to bring a lot of value to all of us.
Yeah, absolutely. I think that's a nice point then to transition on to, as I said, the ways to invest in these opportunities, or at least some of them. And there are two funds that Global X offer. The first one is the Artificial Intelligence and Technology ETF, ticker AIQ. So how much of the value chain and the opportunities we've discussed so far would people get exposure to if they were to invest in this ETF?
Absolutely. That's definitely a fund that has been driving a lot of interest here in the United States. We're seeing definitely a lot of inflows going into that strategy this year. But essentially, we're trying to capture two types of companies within AIQ. One, artificial intelligence developers and companies as well that are offering AI as a service. So those are kind of just one bucket of companies that we have. And the other bucket of companies is more on the hardware space that we were discussing before, right? So either companies that are actually creating the semiconductors, but also focusing potentially in areas like quantum computing that, today we're just starting to figure out how that's going to potentially impact artificial intelligence in 5-10 years, but we have that opportunity to include those type of companies within AIQ. So I think that's very specific to the conversation that we're having today, and we're seeing a lot of investors really using this product AIQ as a potential substitute to something like a NASDAQ 100 strategy, right? So if you're allocated to that, you're seeing that the so-called Magnificent Seven companies account for about 45-50% of that index. AIQ actually caps to 3% exposure to a lot of these companies that are called Magnificent Seven, right? So you have a much less concentration in these type of companies, and it essentially allows you to participate in the universe of companies with exposure to artificial intelligence.
Yeah, okay, interesting. My next question, and maybe you partially answered it already, but is to how that exposure differs from peer and competitive offerings in the space, but is it that capping of the weighting of some of those holdings?
The capping is very important. Again, we really wanted to provide a solid diversification profile for this strategy because we understood, like I said before, that there are going to be multiple companies, right? And even though the market for now has recognized mostly companies like NVIDIA and other hardware players, and of course, a lot of the hyperscalers and these magnificent 7 companies, we believe that over the next 12 to 18 months, the market is going to start recognizing a few other companies that are also very well positioned. Companies like Twilio, for example. Twilio still trading 60, 70%, 70% below their all-time high level. So I think as the market start recognizing these opportunities, is probably where something like AIQ could really continue to deliver value to investors.
Yeah, fantastic. And just to finish on this fund, then I don't want to get into the kind of fundamentals of Global X's investment process here. People can check the first interview for that. But is there one thing that you would point to in the construction of this fund that helps you outperform or that makes it, in your view, superior to peer offerings?
I think what's important for us, especially in thematic investing, is that it's important to identify the universe of companies and essentially try to invest in this universe of companies and have a market cap weighting scheme that essentially allows market dynamics to dictate which company should have higher weight in the fund, which company should have a lower weight in the fund. And the reason why is, when it comes to all of these emerging technologies, it's very hard to identify winners and losers, right? So I think that passive approach can really add value, allowing investors to essentially own the universe of companies within a theme without actually having concentrated bets in one or two companies. That could be very risky. If you don't get that company right and you miss out on the opportunity, you're already seeing how quickly the market recognizes winner, right? So NVIDIA, for example, if you were an active manager without exposure to NVIDIA, you probably missed in some of the most important value creation opportunities that we've seen over the last few years.
Yeah, absolutely. Okay, well, just a couple of questions, I think, on your second fund that Global X offer in this space. That's the Robotics and Artificial Intelligence ETF, ticker BOTZ. How much of the value chain, it's the same question I asked for the first fund, but how much of the value chain and the opportunities we've discussed already would people get exposure if they were to invest in this fund? And potentially you can explain that by kind of signaling the difference between the exposure of AIQ and BOTZ.
Absolutely. So yeah, BOTZ is definitely a lot more concentrated and essentially tries to allocate to 4 different sub-themes. Industrial robotics, like the companies that we discussed before, the Japanese manufacturers in most cases. Non-industrial robotics, companies really delivering automation and robotics beyond the industrial and manufacturing setting. So we talked about Intuitive Surgical, that's a good example. But in addition to that, we also have 2 different buckets, one that is for artificial intelligence and another one that is for autonomous vehicles. So it's kind of a combination of a lot of the themes that we talked about today. But one of the key features of this ETF is that essentially requires companies to generate at least 50% of the revenue from the different sub-themes or in aggregate of all of these different themes, right? So in that way, you're really getting pure play exposure to a lot of these sub-themes within the broader robotics and artificial intelligence sector. So I think that's definitely a very appealing for investors that are trying to get concentrated exposure to companies that are truly benefiting the most or generating most of the revenue from this type of verticals.
And why did you choose to implement that sort of pure play factor or mechanism for this fund's construction and maybe not elsewhere? Like, what's specific about this fund made that more relevant?
Well, if you think about AIQ, we didn't have necessarily that revenue threshold, and we're allowing for inclusion of companies like Meta Platforms and Google and Microsoft, because again, those companies somehow have exposure to AI and potentially is going to become a larger part of their businesses. But today, if you're really trying to get pure play exposure to AI and robotics, BOTZ is really offering that concentrated pure play exposure with companies that are only generating at least 50% of the revenue from a lot of the verticals and technologies that we discussed today. And I think that investors that are really trying to get that pure play exposure, BOTZ is probably the best way to do that.
And to finish then, how have these two funds performed over the last 12 months?
Sure. So in the case of BOTZ, for example, as of the end of July of 2023, the fund was up about 30% over the previous 12 months. In the case of AIQ, during the same time frame, it was about up 32%. So these are funds that are clearly benefiting from the AI dynamics, the robotic dynamics. But we do believe, like we talked about today, that we're going to see those opportunities actually expanding over the next 5 to 10 years.
Well, that's fantastic. Thank you very much, Pedro, for joining me on the show. It's been a real pleasure.
Great to be here. Thanks for having me.